Data-driven insights for serious traders. As the closing bell approaches, momentum is analyzed, tomorrow's key price levels highlighted, and the setups that matter most broken down. This is Trading the Close with Verified Investing.
Hello, everybody. My name is Drew Dosick, and welcome to Trading the Close. Today, guys, in the markets, we saw some more elevation. More helium was injected into the stocks, lifting the stocks back up, negating almost all of the downside pressure that we saw yesterday. These markets in October are really crazy. Up and down, up and down. Soon it looks like we're about to break. Then we're heading back up. It's really been quite a challenging October. However, today we did have some quantum news hit that the U.S. government is not currently going to be backing any of the quantum companies. And there was a big rug pull right in the middle of the day with a lot of investors exiting those positions. We'll take a look at those as many quantum stocks overnight were reaching over 15% in gains. And I'm talking about around midnight, 1 o'clock in the morning. All right, so we do have CPI data being released tomorrow morning at 8:30. So stay posted for that. That should move markets. We'll see what that brings us tomorrow morning. All right, let's jump into the market summary board and take a look at what's going on in the market. So we've got it in the stage. All right, so we've got the Dow Jones up 0.43%. The NASDAQ is up 0.95%, S&P 500 up 0.59%, U.S. oil pushing higher off the sanctions laid on Russia. We'll get into that here in a moment. Gold has a nice pop up 0.52%. Bitcoin jockeying right back up to the $110,000 level, but it's still, for now, bearish consolidation that's going on the charts. All right, so let's jump into the S&P 500 heat map. We could see here we did have a nice green day, but there's a lot of stagnation going on with some of the bigger companies, including Apple, Google, Meta, and Microsoft, all up under 0.5%. NVIDIA pushed up nicely about 1%, AVGO up 1.2%, and then we have some nice greens in the smaller technology companies. Micron up 4%, ANET up 3.91%, KLAC and APH both up over 4%. Nice moves there. Honeywell reported earnings and is popping up 6.71%. Tesla even up 2.17% after the nasty decline after earnings. So investors were rushing back in, and that wasn't the only one. IBM also reported earnings, and that stock started ripping up basically as soon as the market opened. So let's look at the S&P 500, and where does this take us, folks? Well, really nowhere, guys. Yesterday, we had some decent selling pressure that was saved midway through the day, as I highlighted. And today, that momentum continued, really putting us right back in line to this doji candle that distinguished indecision in the marketplace. Well, apparently in a day or two, that's just evaporated and the markets have gone right back up. So now in the most near term, these 4 days of price action, this is consolidation. Now, if you look further back, this big red candle and all of this price movement moving up, that's all bearish consolidation. But for me, this is right on the verge of being a breakout to the upside as well as a breakdown to the downside, because this angle of trajectory is roughly over 45% of an angle, or 45 degrees, excuse me. So it's a little too high for me to call this bearish consolidation. The bearish element is that we haven't broken this big red candle. We'll see if that happens in the coming days, but the last 4 trading days, any bit of negative pressure has been bought right back up. So it's just investors are still lining up to buy that dip, buy that dip. We've been trained for so long, especially when you zoom back out in the markets and it just keeps going up. I don't blame them, but this is the first big crack in the ice, if you will, that is still there. It still hasn't been fixed because we haven't gotten over this candle. We'll see if that occurs tomorrow with the CPI data. Next up, the Qs. Qs here, very similar to the S&P 500, now starting to put in consolidation right at the top of this red candle. That would imply moving higher. Now, this is immature consolidation. We still need a few more days of consolidation before that builds the momentum to break through. But again, the CPI data may be the catalyst tomorrow to push us right through it. SMH, as we move over to it, The daily topping tail is still intact over here, but very much like the other indices now, except for this one's clear. Look at this, a big red candle down, immediate pop up. Most of the consolidation occurring all in the top 50% of this candle. That's not that bearish to me, folks. So this is implying that we could potentially be going higher. But again, key catalyst tomorrow on the CPI will certainly help give us better insight. Now here on the IWM, this is a little bit more interesting to look at, because you can see here yesterday I talked about how price action was saved by this bottom end of the parallel channel. Today we continued moving higher up on the IWM, which is great, but we've got a weekly topping tail now in place. Last week's price action on the IWM, as you clearly see, a massive topping tail right here hidden amongst all of the other candles. So that's a big negative pressure on the small cap stocks. Particularly, we've been having regional banks have some issues recently, and the IWM has an awful lot of regional banks inside of it. So this topping tail could be foreshadowing further downside in a break of this parallel. But as I've said on the daily chart, so far we're saved. We'll see if tomorrow reverses a lot of these gains and then continues consolidating along this parallel channel, which then would continue to imply a breakdown would occur. First level of support, 237 and 33 cents. Next up, Bitcoin, guys. With this Bitcoin fall, notice how this is a little different from the decline that we experienced from reaching the all-time highs in August. Notice this decline is a gradual, well, it's pretty steep, but it's in a slightly declined angle of price action. And then we caught a bounce and then continued up to new all-time highs. But this decline is different. We have a sharp drop down, sideways consolidation, followed by another sharp drop down and sideways consolidation. Now look, we're trying to break this consolidation. Here on Tuesday, we attempted to do so, but then price ultimately came all the way back down to close the day here. Still, this is all bearish consolidation. It will then buck this bearish consolidation if we get up and start tagging this 50% area of the parallel, around $116,000. But guys, be watching carefully here, right around $106,500. That's going to be the break point if price starts retreating further on the chart of Bitcoin. Next major support's going to be down here on this trend line, around $97,398. Next up, gold. Not too much to report here. More sideways consolidation. Beautiful bounce and recovery yesterday, but price action is still maintaining down here at the bottom of this major red candle. We'll see if that continues in the coming days, as that will have more bearish consolidation momentum, which then could enable price action to break this trend line that you see on the chart. Next support past the trend line will be down here right around $3,700. Next up, silver. Silver displaying a very similar pattern as gold, except for this one's a little more defined. We had a down day and then sideways chop, another down day, more sideways chop. So let's see if this continues. We should likely bounce around this first support area, which is now resistance at 49.83, and this lower support area at 46.79. We should be bouncing around there over the coming days, which then could lead to further near-term downside pressure on silver. Oil, guys. So oil, as I said earlier, got a big rocket up today. And it did so because of the sanctions the U.S. has placed on Russia, really hurting two of their major oil developing countries or oil companies out of that country. They're going to be restricting sales to India, major players in that side of the world. We'll see how much of these restrictions are followed. And if they're followed, this could be a major pressure on Russia's economy. But for oil now, if we're going to be eliminating that source from the global supply, that obviously is going to increase demand on what oil is still around the world, which is why U.S. oil ripped up on the charts today. But where did it stop, folks? Doesn't matter. It's like the news. It doesn't matter what the news is going to be. The charts are giving us foreshadowing insight as to where price action is going to go. And what do I mean by that? Well, I mean by these tails that I was talking about just earlier this week. These big three wicks on the daily candles were giving me insight that oil was about to bounce up, but I didn't know news about these sanctions. I didn't know what was going to happen with the potential rollout of these sanctions, who was going to be halted from buying the oil and who was not. So, but the charts were showing us this was all in the works. This was all in the cards, that price was likely going to start pushing up higher. But notice where we're closing today, guys. this old common declining trend line that has been so pivotal and critical for price action, especially from April of this year. You could see this trend line really rejects price coming from the bottom, and it saves it when price is coming from the top. Right now, we're currently getting rejected at the spot. We'll see if these sanctions continue to roll out, or at least continue to be deployed and followed by these other countries. That could push oil up here to this next declining trend line right around $66 on the chart, depending upon how early it can get there. But I do still see US oil potentially rising higher. We'll see how long it takes to get through this trend line. Next up, nat gas. As you can see here with nat gas, as I said yesterday, we have moved up a little bit too far, too fast on nat gas. Great move on it, though. But it should, if you're a bull on nat gas, you want to see price consolidate in this range between $3.83 and $4.08. And so far today, that's showing exactly what's happening here on the chart. Now, if we break $3.83, the next support is $3.57. But this bullish consolidation would have then been broken at that point, and we'll have to reevaluate the pattern that's displayed. So currently, be watching price action between these two levels, resistance at $4.08 and support at $3.83. If we stay in that range, we're likely going to be pushing higher on the chart of nat gas. All right, next up, guys, some quantum stocks that really had a lot of momentum at the beginning of the day, and in the middle of the day, it just got smacked down. So last night, QBTS, IonQ, and Rigetti were all just rocketing up in overnight trading. They were all just ripping. IonQ, I saw, was trading up around the $66 range. That's up here, folks. And that was all on the back of news. The United States was going to be backing one of these companies, maybe a couple of them, and providing monetary capital support. Well, that came out today that at around noon that was not going to be the case, that the U.S. apparently is not looking to invest in these companies. And you can see here on the 10-minute chart, right here at 11:40 was when that announcement was made, and then boom, right down on the charts. Now, again, IonQ was all the way up at $66. And then now this thing just declined nearly 9% in a little over than an hour, as you see here. Now, these stocks are very volatile, so be careful, go light if you're investing in these quantum stocks. But I do believe with this sort of news, we're likely not done with selling pressure. Support levels listed, as you see here on IONQ, $53.96, $50.29, and $47.23. On QBTS, this is one of my other favorite quantum plays. You can see what's starting to form here: a left shoulder, a head, and the very early stages of a right shoulder, with this trend line being the neckline. If this were to play out, folks, watch out below. Head and shoulders measured move is down here at $8.26. And I also want to state, yesterday I did bring up QS, QuantumScape. I know that's a solid state battery company, and I mentioned they were involved with quantum technologies. My bad there. It was a long day that I had in the office, couple trades. We were really heavily in. And anyway, we're covering the quantum stocks today. My bad on that, folks. Next up, let's look at SMCI. So we see SMCI also big decline today. Now, they didn't have earnings. So what happened? Well, they pre-released earnings, and they also said that they're going to cut their fiscal Q1 forecast. Well, whenever that happens, investors aren't too excited about cutting forecasts. And as you see here on the screen, down 8.72%. Great decline there on SMCI, steady decline at that too today. But it's starting to get all into this consolidation. So support is very close. The next one level that I have is on this inclining trend line, currently at $46.28. But I love areas on charts where I have converging trend lines, almost like an X marks the spot. And you see that down here at $44.58, created from a longer term inclining trend line from the low in April. And then this pivot high from August, where you could see it strung down through this pivot in September. Price action got rejected, and then ultimately broke out above that area. So this would be a great spot potentially for a swing trade, as long as SMCI's books are in order and they continue to develop and build out some more data centers. Next up, Love. Now, Love reported earnings today. As you see here, they actually beat. They beat on earnings per share by 398%, and then on revenue by 0.46%. So they did have a good beat. However, their Q4 revenue outlook was minimized. It was reduced. Again, much like what happened with SMCI, except for SMCI did pre-reporting news, right? So the investors here didn't like it too much, sent the stock down, but you can see the stock got saved right here at a gap fill later on in the middle part of the day. Now, all of this move, as you see here, this has been a move up, got rejected by this trend line, and then a move down in sideways consolidation. That's a ginormous bear flag, folks, on the chart. If this does play out, love is coming down here to $26.26. Now, if I flip it over to the weekly chart, you can see where this declining trend line is coming from. It's coming back from an April of 2021 pivot high, connected on down through the most recent pivots in July of 25. So this was in April of 2021, excuse me. So about a 4-year long trend line declining. Once this trend line breaks, now this has only been tagged twice, so the next attempt will likely get rejected again. But once it breaks, it will free up space for Southwest Airlines to be moving up on the charts. The major contention I have with that happening in the near term is this pattern of the bear flag that does imply we should be coming down first before attacking this declining trend line. Next up, Tesla also reported earnings after the bell yesterday. Now, they did miss on earnings per share, as displayed here, 10.42%. They beat on revenue by 5.86%. You can understand this too. Tesla's gone through a lot of issues this year with the different political, opinions and things that have come up. It's definitely not been enabling Tesla to excel with growth. And also, they've got their tax credit that was just taken away last month, a $7,500 tax credit for Americans to buy their cars. So you can anticipate that there probably was a lot of buying going into the end of the quarter for Tesla, but it still didn't meet analyst expectations. So the stock initially dropped, and then as we see here, recovered to finish green on the day, up 2.28%. Guys, what an incredible recovery here on Tesla. Now, Tesla, I've displayed before, has an inverse head and shoulders pattern with a potential move up here to $512.97. I was anticipating a decline after that earnings to potentially pick some Tesla up at the support level of $395 or $381 for eventually that bounce up to $512. But man, investors must have had insight as into my decisions, as they didn't give me an opportunity to pick up any Tesla. Price just ripped up higher on the charts. We'll see if this bullish momentum continues. Next resistance here at 457.27. Next up, Las Vegas Sands also reported earnings. You can see here they beat by earnings per share by 25% and revenue by 9%. So the investors reacted appropriately and shot the stock up. Beautiful push on this today, up 12.39%. Now, if I scroll back out to the weekly time frame, you can see clearly we've got a major line in the sand derived from a trend line from March of 2014, strung through these pivot highs, connected over to this pivot that you see here in January of 2020. And then here we find ourselves not far away from this trend line, which will be major resistance. So be watching if Las Vegas Sands pushes up with this continued momentum after earnings. Be watching for resistance right around $60.35. That area should be a very tough test for Las Vegas Sands to get through without any sort of consolidation or potential pullback, now considering prices moved up over 12% today. And even from this low here, this is now tagging on a very nice potential gain all the way up to 24% back from October 14th, not that long ago. So that's, running out of at least near-term steam, and will likely start consolidating on this trend line once and if it hits it. Next up, IBM, another stock, much like Tesla, that reported earnings that did not meet analyst expectations. We did beat, though, on IBM. We had earnings per share up 8% and revenue up 1.48%. But IBM had disappointing revenue in their cloud services with Red Hat. That's what really was initially scaring investors, which is why the stock opened up down here in the $264 to $265 range. But look at this 10-minute chart, folks. There was no downside immediately out the gate. It was just a rip-roaring rally on IBM all the way back very close to the flat line, still finishing negative on the day, down 0.87%. So where does that take us here with IBM? Well, I see here on the chart a topping tail at 301. And then I also flip back to the weekly time frame. I got another topping tail here at 301. Geez, with two topping tails within a couple weeks of price action and prices rocketing back this quickly, that scares me, folks. Either investors were wrong right here, or investors are wrong here. But either or, it is kind of one of those forks in the road. Which way do you go? I've got two different signals here on the chart. Obviously, this rally up near term was very bullish in the near term momentum, but I've got major negative sentiment right here on the charts, not far behind it, implying we should be going down. The good news for IBM and the bulls is we're back above this long-term inclining trend line. You can see this is back from before the dot-com bubble burst. So this is a long time ago, and IBM's been fighting to stay up above it. You could see we got rejected earlier from the June push, collapsed down. Now we're making another attempt, but when we're doing it, we're putting in bearish signals on the chart. So really interesting and hard to analyze where the next price action is going to go on IBM. If we come back down further on the charts, next support's going to be down here at $254.83 from this near-term inclining trend line from the June 24 pivot that occurred back here on the charts. Really interesting stuff going on in the charts, and I guess October is giving us the volatility that we crave. However, now with split decisions going both ways, it'll be really interesting to see the data information tomorrow with the CPI data. That should help paint a clearer picture, at least for the next week or two before we have more earnings. All right, guys, thanks so much for tuning in. Again, my name is Drew Dosick. I'll have some more information, chart setups to you next week, but don't forget to like and subscribe, and then also send this out to your friends and family. Make sure that they too can learn technical analysis on the charts and make great trades on their very own. All right, guys, we'll see you next time. Until then, enjoy the weekend. All right, folks, take care.